estate market is appreciating, people might want to add to their real estate portfolio in an investment. How would you help them with that?
Absolutely.
I'm Caroline Gow in the Baird & Warner Glenbrook office, and we came out on this snowy day to visit with Nate Ruben. I've known Nate through the chamber, and they've been a great connector of small businesses, and it's been very supportive. So thanks for having us today.
Absolutely. Thank you for having me.
So Nate is a financial advisor with Northwestern Mutual.
Yep.
So tell us a little bit about you and your business.
Well, thank you. First and foremost, I've been a client of Northwestern Mutual for the last 5 years. And as a small business owner, I found that Northwestern Mutual had the right mix of tools to work with me, not only as a person, but as a business owner. And over the past several years, they've been recruiting me to become an advisor. And last year, I made the leap. This year, I'm blessed and privileged to work with families, but also with other business owners like myself. And I serve a variety of very fun and interesting clients.
Perfect. So Nate, thank you. We're going to talk a little bit about real estate and how buyers and sellers can decide to make that change. So if a family is bursting at the seams and they want to upsize, how do they make that happen?
Sure.
How do they decide what's affordable and what their price range should be?
That's a great question. Whenever I'm talking with families who are thinking about moving, first we take a look at their finances from a few different perspectives. We'll look at a balance sheet, figure out how well they've saved, and figure out what other kinds of investments they have. And then we'll look at an income statement and figure out how much their cash flow needs to increase or decrease in order to make a move. And then we'll evaluate things like credit. We'll look at how do we calculate a down payment they can afford, and ultimately what's the right neighborhood and the right amount of house to buy. So it's very personalized to the individual, but a lot of times we'll look at things like what type of loan are they looking for. Are they going to go the conventional route, or is there a special program they might qualify? And then we'll just work backwards to calculate the numbers for them.
So do you start with what you want their monthly budget to be and then back into what house amount that they can afford?
Absolutely. I mean, there's sometimes we'll go with, hey, I have the idea, this is the amount of house I want, when can I afford, can I afford? And we'll go from that as the goal. But usually if somebody is like, this is more of an imminent need, what can I afford now? We'll go based on what their budget dictates.
And how do you help them through the process of what if they need to sell first and then buy versus they're allowed to buy first or sell?
Oh, that's a great question. A lot of times it just depends on somebody's personal situation. So if a client has great credit, for example, and they have enough money to afford a down payment without the reliance of selling that first house, we're going to be able to qualify for a loan, and we're going to go out and get them whatever house they're looking for. If they're in a spot where cash is a little tight, they maybe haven't planned enough or don't have enough of a safety cushion, we're really going to recommend trying to get that sale in place first before going out and buying. There are other options, though. For example, if a client not only has investments but has certain types of insurance products, they can use that as collateral and get a line of credit. So maybe we can create a temporary cash flow situation that wouldn't affect their typical financing offers.
Oh, that's interesting because people might think of pulling money out of their current home as an equity loan, but maybe they aren't thinking about borrowing from retirement or from some other
Exactly.
insurance products, like life insurance specifically, or
Life insurance is a great opportunity depending on what somebody has in place. Sometimes with life insurance, it could have qualities where you build up cash within the policy, and then you can either take the money out of the policy for whatever you need it, or you can use it as an asset to get a line of credit. And typically, it's not going to affect the traditional credit offerings that you would get at your bank for a mortgage, so it could be a really additional helpful tool.
oh, that's cool. So if somebody wants to invest in real estate, because I know the prices are going up and it's actually a good time to add to their portfolio, how do you decide whether they should pull money from retirement or some other sources to use for an investment property?
Typically, I don't recommend pulling from a retirement account unless there's very specific situations going on. But when we work with clients, we look at a variety of different asset classes, help them figure out where the money should go. So we use a method called portfolio rebalancing, where we're actively investing in real estate for our clients. So sometimes if they want a more hands-off approach, they just say, hey, I'm looking to get more involved in real estate. When you look at real estate, though, as a performance overall, we see that most money is made in real estate when you can create a business model around it. So just buying and holding real estate might not be the best investment, but buying a property with the purpose of renting it out and creating income could be an incredible opportunity.
So as the real estate market is appreciating, people might want to add to their real estate portfolio in an investment. How would you help them with that?
Absolutely. So a lot of what we'd consider is what kind of investments do they already have. If we're managing somebody's retirement account, for example, we're usually looking at the 9 different standard asset classes, one of which would be real estate. And if our clients are looking to have a heavier allocation there, we'd move some things around. And we could do that through more of a formal investment vehicle. But also for our clients who want to physically own more real estate, we'll talk through, are you looking to buy and hold? Are there certain neighborhoods that you think maybe are on the rise? Or are you looking to create rental income, which is really where they're going to see the biggest benefit as a real estate investor. So ultimately it comes back to that same balance sheet and income statement we talked about at the beginning. How do we know where you're at and really walk through your opportunities?
So if somebody's becoming a first-time investor, maybe they own their own home, but they want to add a second property, how can you help them figure out the ROI and the different numbers that they should do? They need to make a certain percent or charge a certain number of rent dollars. How does that help?
Absolutely. So I have a few clients actually who specialize in real estate investing, and a lot of times I'll look to connect them for actually implementing something. But at the high level, when I educate them around what should we think about, ROI is the first thing. If you're going to start a business, you need to know what is your investment going to do for you. So we look at things like, are there going to be management costs? Are there going to be maintenance costs? Everything that goes into actually keeping that property viable for their customer. Then we think about marketing costs. We think about lag time between renters. Everything needs to be a consideration, and then we'll add up all their expenses and then figure out how much should they be charging. I'm definitely not an expert when it comes to real estate investment, but I have people in my network who are highly qualified, and we can certainly assist clients.
So in 2022, what kind of forecast do you have? Any good tips for us?
Yeah, the number one tip is to get organized. If there's one thing that we know about the economy is that trying to predict what's going to happen is most likely going to lead to disappointment. But we do know that the more organized you are about your goals and what kind of plan you have, we could be very swift in our response as the economy changes directions. So in terms of a more in-depth economic forecast, I recommend looking to Brent Schutte, who's our lead economic voice at Northwestern Mutual. We've got a great weekly recap of the market we send out, and I'd be happy to connect people with that.
Thank you, Nate. How can people reach you?
The easiest way to reach me is on my cell phone, 847-946-1803. I'd say send me a text or leave a message, but I'm also on Facebook, Instagram, and LinkedIn, which I'm sure we can leave in the comments.
This has been very helpful. Thanks for having us today.
Absolutely. It was my pleasure.